Okay, check 1, 2, 3. Okay, you're starting. Okay, recording. Good. Do I have anyone else joining in? Okay, so today, this is our third session. So people who miss first two sessions, that's okay. Don't worry about it. We're gonna start fresh. So today I'm gonna, before we go into specific value, like doing a stock, I just want to talk about markets and our moods. I think it's very important for us to understand how our moods perceive when we hear about markets and how things happen in the market, right? So before we go into the presentation, right? um, so here's a quick thing about me. My name is Chandan Malu, software engineer by trade. um, I'm also founder of co-founder of sccdiver.com, which is a website where we do fundamental investing. We showcase processes and what I would like to do there, right? What to do, how to value a company, what things to look for, right? And I also host a masterclass with Cillian, with a friend of mine. I need to keep adding folks.
By the way, I invited Prashant Gupta to join, so I hope that's okay with everyone.
Yeah, please.
I don't know how do I invite him to join the WhatsApp group, but I can.
We'll do it.
Okay, sounds good.
Okay. Thank you. Thanks, Nishanji. So again, just for folks who have just started, again, sorry. Again, today we're going to talk about markets, and we're going to talk about all wonderful moods that we end up having based on markets conditions, right? Again, I am a software engineer by trade. I also run this website, SSR, which we're going to talk through more as we proceed ahead. Why I built it, what was the motivation behind it, right? I also host a um, masterclass with Gaganji, who is a Syrian co-founder. So in the next 30 to 40 minutes, right? Again, please ask a lot of questions. I want this to be very friendly, okay? Very interactive. And so I'm not an expert. I'm learning like you, right? What I'm gonna say is whatever you're gonna see in the next slides or later, all that is not my work. I've just learned. There's some wonderful people who have done a lot of wonderful work. I'm just copying them. I'm not saying that I know everything. I'm just learning. So please let me know if there are some questions I could not answer. Maybe I'll say no right now, but I'll come back to you and we can discuss. Okay. And if you think you are the expert, let's talk about it. I'm open to that. Fair? So please come forward and let's learn together. Okay. That's the overall idea. So again, this is the website. I will highly encourage everyone to go to the landing page and please sign up there. Would love to get all your emails, and then we can have. I can send you some material after the presentation. Okay. So I encourage everyone to go to the website, look at what's conveying, and if you have gone through any of those emotions or you've gone through any of those things that have been there, let me know. I would like to talk about that. I would learn about what has gone through your minds, right? Again, this is what you would see for the given stock. We provide recommendations, we provide the fair value estimates, we provide like short, punctured, sweet data that you can see to quickly value a company. Okay. Again, disclaimer: whatever we talk today is not a buy and sell advice. Please do your due diligence. I am not an expert. Okay, please be careful. Okay. Again, so let's start. So when you see this color, I hope no one is like has any problems with the color, right? This is red color. Is that fair? Everyone can, yeah. When in context of market, when we see the red color, uh, uh, and again, please contextualize this in your head. Write it down on a piece of paper. When you see markets in red, how do you act? What do you feel? Right? Just write it. Take a piece of paper, write it there, and maybe you can send your answers to me later. But let's take like 10 seconds. Think about what goes in your market when you see the red color first time. Yeah, feel free to type out. Yeah, that's perfectly fine. But yeah. Thank you, Nitinji. Fear. Oh, you say opportunity also. I like it. Yeah, again, feel free to write in the chat box. Uh, my email is chandan.malu@gmail.com. My first name dot last name @gmail.com. So please send me an email, and it will be great to have those answers, because then I can go through that and see what people think. Right? Market's all about what does the overall group thinks. Right? Okay. So let's see. Right? I think these are some of the. I was looking at some of the memes regarding market drops, and something really come up, right? सुन रहा है ना तू रो रहा हूँ मैं. I don't know if anyone relates to that, right? Uh, like I just don't understand markets, right? I'm so at this point I don't even know what to do, right? Some people feel like that, right? And it's still going down. What should I do with it, right? It's like, are you kidding me? Right? We feel all this, right? We feel this mixed emotions. Is that correct? Right? Fair enough. Okay, so let's see. Right? Let's see. Let me know if some of these things that I just listed out there matches with any of you. Right? We feel really bad. Right? We feel like big time losers sometimes. Right? If markets continue to drop, we feel like big time losers. Why did I invest? I knew I should not invest. Why did I invest? Why did I buy this stock? Right? We question everything. Right? We question everything. Right? We look at TV articles. We want to make sure like we try to console ourselves. Okay, I think I'm doing it for. I was trading it. I was gonna sell it for 3 days, but now I'm gonna extend it and keep it for 1 year. I'm gonna become a long-term investor, right? After 1 year, it will come back, right? I'm gonna. We start questioning, right? Right? And after continuous loss, we end up selling, right? Right? And sometimes we say, "Oh, market's rigged. I'm not gonna enter the markets." This is my story, by the way. I did this when I was in India. I lost a good amount of money with DCHL. It was so bad stuff for me, I would say. And I vowed I will never enter the markets. But here I am talking about markets to you, all of you, right? Talk about my journey, right? Does that resonate with everyone? What you see on
Mhm.
the screen? Yeah, you see, right? Okay, let's see. Now market is green, right? How do people think? Again, take 10 seconds to contextualize, think about it, and again write it down. Again, chat. You can again put it in the chat box. Uh, Please let me know what do you think when it's green. What comes to your mind when you see the green color? Welcome, Ashish ji. Yeah, so we are Ashish, you're talking about when you see the green color, what do you feel? What is the first thing that comes to your mind?
Yeah, I should
Again,
have bought that stuff.
okay, great. Yeah, I'm seeing less people typing. I'm hoping they have it in their mind, right? So okay. Again, don't be shy. I mean, this is wow. Thanks, Pranab ji. Prashant ji, you're a new member. Do you want to share something?
It just means life is good.
It's good. Wow. We feel good, right? We feel some people feel like they're genius, right? I have made a killing, right? Right?
Mm.
Right? And if it continues to begin, we feel like super winners, right? We don't question anything then. We're like, we did everything good, right? No questioning, right? We don't check TV, we don't talk. We want to talk to our friends, we want to share our stories. I made X%, right? I made double, I made triple, right? We spend money, right? We spend money because we thought we made a lot of money, so let's spend some money, right? Let's do some party, right? But we forget it's just paper money, right? We gamble sometimes, right? We say my name, and if you're not in the markets, for people who are not in the markets, we say my neighbor made a lot of money, right? I also need to do something. He made money through options of futures. Let me invest. Let me do options trading, eh? Right? And you make money, right? That's good, right? We speculate, right? Is that correct? Does that resonate with everyone?
Mm.
Yeah, we do that, right? Some like here's some memes that I found, right? Like someone will say, it's not the bull market. I'm a genius. I did it, right? It's not like right. Um, um, CEOs of the companies they'll be saying, yeah, we are beating expectations. The stock is going like a big time, right? So here's what I wanted all of us to take away, right? Think as a contrarian, and what I mean by that is like when it's red, you should get excited, right? You wanted to buy something for $10. Now it's at $8, right? It's a discount, right? You should get excited. This is the time to buy it. This is the time to have a process. This is the time to think about the business. This is the time to do the due diligence and follow the process of what you've been doing until now, right? Right? If it's green, get a bit scared. Why is it? Why is the stock price is increasing? Is the business that I remember last time we had the stock, the first course, right? And we said we will consider stocks as not paper. We'll consider stocks as business, right? So now we want to see, has a business done the same thing as what the stock price is reflect? Like if the stock price has increased by 10%, has the business also increased by 10%? Right? Right? We want to do this, we want to do the due checks, right? We want to see how are the earnings of the market, what the management is saying. Is the management selling stocks, right? Right? In both the scenarios, I want to do portfolio allocation. Am I have I done my portfolio allocation correctly, right? 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 If it's red, do I want to change my allocation, right? If it's green, do I want to trim some of my bad holdings, right? I know which are not good business as I learned with time, right? Does that make sense to
Yeah.
everyone? Yeah. So if today this is the takeaway that I want you to take away from this position is like, think as a contrarian. When it's green, question things, be a bit scared, revisit your stocks that you bought, see, have they done, yeah, they are done well with prices, but as a business, have they done better, right? That's good. Okay, and that's it. That's market to you, my friends, right? And that's our markets, and that's the moods that we have, right? 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 So and just remember this. So this is a wonderful quote I like. Never forget, bull markets make you money, but bear markets make you rich. Right? We had three opportunities, right? I mean, we had many opportunities. When I was in college, there was 2008 crisis. I didn't have money, but 2020 I had money, so I knew that I had to. This is the time to buy, but I didn't have any process. I really didn't have any process. So I bought good amount of stocks. I made double, but I sold them. I sold them. I didn't buy good companies, to be very frank. I knew some of them, but I thought the good companies are not falling. So let me buy the cheaper companies, right? Right. But the problem is, right? Then I didn't know. So I just sold them. Okay, I made double, let me sell it, right? So I didn't have process. So as I went through the process, that's why I built scdiver.com to have that process to make sure when when I'm buying the stock, I'm calibrating it, right? And I'm not selling it just because it doubled. If the business is growing, I'm happy to keep it, right? Right. So again, going back to the first two presentations we did, right? The secret to investing is when the markets are down, buy wonderful companies, keep them for long term, buy at a price that makes sense. Don't buy at high prices, right? So we had three opportunities after that. 2020 was the opportunity. Then there was 2022, and there was this October 2023, right? When the markets were down 15%, right? And now it's like 30% up, right? So again, these are the times that you would like to capitalize on, right? Um, this this is a wonderful chart I found somewhere. So here the man is the person who is the business that represents the business value of the company, and the stock prices is basically the dog which is like falling up and down, right? So that's what is market. We as individuals need to spend time looking at business and what the business is doing. Is it going up? Is it going down? That's what we need to look every single day, right? And when we do it, the business gives us those opportunities. They do a product launch, they do quarterly presentations, they do investment sessions with bankers. So those are your times to see what they are saying, right? Understand that business better, right. Don't sell on a if. Never do that. Don't speculate. Okay. Okay. Again, disclosures. Nothing of this is a sell or buy advice. Please do your diligence. Thanks, Aparna for joining. We're almost close to the presentation. So again, for any questions, please reach out to me. Happy to help. Right. Um, and let's jump to the two stocks that I wanted to discuss with you for scdiver.com. Is that fair? Any questions before we go to scdiver.com and go the two stocks that I was thinking, and then we can take two stocks from everyone. Is it good? Uh, yeah. Can I know Ashish ji sent out this list, but like, why don't we put a list of stocks that people want to look at and just put it in the chat box, and we'll pick at randomly one or two, and then we'll go at it. Is that good? Until then, I'll take Costco or Amazon as an example. Fair? Okay. So again, the idea is to take businesses that we all understand and we all love. Okay, so I'm going to take Costco as example. Thanks, Ukul. Um, that's my favorite, and I'll tell you, I had it, I sold it. I'll tell you why, all those things. But the beauty of Costco is the income statement is such a clean statement. Like if you look at any other company income statement, you'll see a lot of things, right? So, so what does Costco does at a high level, right? It tells it's a retailer. It sells you.
Chandanji, can you zoom in? This is very small for. Okay,
Yes,
perfect. Yeah, good. Thank you.
for the feedback. So again, this is scdive.com. We are looking at Costco, and I'm hoping everyone understands Costco as a business. I'm not expert of at calling out what a business is, but for me, Costco is a retailer which me and my family loves. We always go there whenever I want to buy any big purchase. The first thing I check is Costco selling it? If Costco selling it, I'm buying from there. The simple philosophy is, because if I don't like it, I can return it. That's my simple philosophy, right? I know it always has the cheapest prices, right? And the one thing that I really want to tell you how Costco is valued, and we can go over certain principles I look at, but there's a line item here which is called membership fees, right? Do you see that? Right? Everyone sees that? It's like 4 billion, 3 billion, right? It's consistently growing, right? And that's what market values Costco at, right? So if you look at Costco's operating profits, right? Which is, so again, remember, like the membership was 4 billion for 2022. Okay, so Costco's operating income was $8 billion, right? So 50% of them is just membership fees, and that's what it has been, right? So market values Costco membership is so high that it gives like a more than 30 multiple to, right? So there was a time where you could have bought Costco for $200 billion in 2022, right? Right, at $453 when it was 25 times earnings. Right, was a good time to buy. Right now it's like $661, right? Something like that, right? Does that make sense at a high level to everyone, right? So when I am looking to buy a stock, the biggest thing that I look at is what are the cash flow earnings. And the reason I look at cash flow earnings is cash flow earnings can never be cheated. No one can hijack that place. It's the real cash that entered the business and that exited the business. So it's the real cash the business made, right? And it's operating business. It's not, if let's say if the business had a property that they had bought for, let's say, 10 years back, and they sold it and they made a, like, so let's say, a profit of $1 billion, right? The net income will have that profit added to it, but operating income will never have that profit added to it. Does it make sense? So operating income tells you what the business is producing on a regular basis, and that's what we want to evaluate the business on. Make sense, right? So as you see, right, Costco has wonderful return on capital, right? So last time when we discussed, we said I think Gokul, it's there. It's there in the 10K. It's a very good question. It's there in the 10K. We can probably talk about that. Uh, they reveal a lot of information in the 10K. So everyone knows what is the annual report and what is it called. It's called a 10K document, right? Everyone knows that, right? So lot of details is there in the 10K report, I believe, and there are investor presentations where they will reveal things like that, I'm assuming. But again, going back, like, we just want to, so one of the reasons I started Cedar, my goal was, like, given a business, given a stock, I want to quickly determine should I buy it or not. Simple, right? Because as I said, like, we have, like, there are a lot of businesses. So the three things I look at is cash flow and return on capital. If that looks good, then only I'll enter. Otherwise, it's like a no, it's like a no. What To quote Charlie Munger, he says it's a 10-foot rod bar. I don't want to jump on it. I just want to jump on, like, single bars, right? Right. So I want to keep it simple, right? So I look at Costco. It's the return on capital is like it's like 25% plus, right? So I know it's a wonderful business and it's sustained, right? It's dropping a little bit, right? Right? But that's okay.
Do you think it is overpriced right now, Costco?
So there's a wonderful quote: overvalued becomes more overvalued, and cheap becomes cheaper. So Nvidia, Costco, yes, you can say they are overvalued, but they are growing. So if they are growing, market is happy to give them a premium. So and I'll tell you, there's a wonderful report that I have built. It's called the compare report. Okay. Oh, I have a problem. But anyways, so if you see, so what I do is for me, Visa is my best. I think Visa is one of the best companies in the world. So I compare everything with Visa and the index. So what this report is doing, it is comparing Costco's last 9 years of record with Visa's last 9 years of record and with index last 9 years of record. Does it make sense? So what we are saying, in the last 9 years, index has returned us 8% return. And how is that? How is that? Because index earnings have grown at 8% rate. Do you see that? So index price has gone by 8.46% CAGR for last 9 years because index income has grown by 8.5%. Does it make sense to everyone? Now let's look at Visa, right? Again, these are called fundamental dimensions, right? Income, net income, operating, right? Cash flow, right? If you look at any of those pillars for Visa, at least anything has grown by 10%. Do you see that, right? Everything has grown by 10%, right? So it's actually beaten the index in some way. And so the market feels, because it's a good business, we want to pay a higher multiple for it. So if you see, if you just had invested Visa 9 years back, you would have made 5 times your money, versus in the index you would have made double your money. That's a big difference of buying a wonderful business, right? So your money has grown at 60% rate, right, at Visa. Does it make sense? Right? Now, 9 years back, if you had invested in Costco, again, the numbers are not here. I'll tell you why. It's compounded at 18%, right? And so I also have numbers of 5 years. So again, 5 and 3, they're all there. So this is comparing last 5 years with last 5 years of Visa and last 5 years of index, right? So again, if you are invested in Visa, by the way, Visa is actually a very good opportunity to buy right now, I feel, right? We'll talk about more about Visa maybe in further conversations, right? Costco's revenue has grown by 11%, 12%, close to 12%, right? But this is called operating leverage, by the way. I don't know if you know operating leverage. Operating leverage is basically the revenue is growing, but the net income is growing at a much higher rate. Does it make sense? Right? Revenues are growing, but because the business has optimized its cost so much, its income is growing at a much higher rate, right? And that's what we see in business and in Costco, right? Costco's revenue has grown at 12% rate, but its profit, you see, and today, like yesterday, like 3 days back, it said it will give $15 of special dividends, right? And so market has given it a 21% CAGR. I'm going to pause here. I want everyone to sink this in, right? What we are doing is we are comparing any stock that we want to buy with two wonderful companies, right? One is like Visa, whatever you feel, right? And then compare with index. If I'm buying this business, will I beat the index? That's my goal, right? Right? Or will I beat Visa, right? And that's what this particular table does, and that's what I look first. Am I clear? Very clear? Okay. Okay. Again, there are main things to look. Just trying to like see whether it's a wonderful business. That's the key thing, right? And then we have something called as KPIs. Right? KPIs are basically something that that basically tells you what is happening underlying the business. So a business can have multiple sub businesses, right? Like for Amazon, it's like advertising, retail, subscriptions, right? Kindle, right, and so on, right? So, or it could be like based on geography, right? So in case of Costco, they give us how much their Canadian operations are returning, how much their international operations are returning, how much their US operations are returning. So you can know the trend of how the business is growing, right? If you see US, right, they're actually adding a lot of capex because they're building a lot of stores, right, and their operating income is consistently increasing, right, for US, right? See, right, and their assets have been increasing in US with time, right, right, right? And look at the revenue; it's growing like crazy, right? Makes sense. Costco is expected to launch in China. It's I don't know if it'll work or not, but that's another growth driver for Costco, right? Again, here I talk about like these are the businesses under subcategories that Costco reveals to us, and it's providing us those breakdowns for you, right? Make sense? I'm gonna pause here, right? Uh, any questions before we go? Anyone wants to speak up? Sandy, drop.
I can speak.
Yeah,
So
go ahead, Ashish.
I'm not like a very financial savvy guy. So sometimes I get confused with operating income, revenue, all those kind of terms, right? And what are the key parameters that we should look at? Like you told us some of them. Um, Maybe I need to do some more study to kind of internalize those. So just like my frank view on things. Yeah.
Yeah, thanks, Ashish. Exactly, I had the same things that you've gone through, Ashish. It's very hard. There are a lot of terms, and so the only my recommendation is obviously read it, but look at good companies and see what things are going there, and try to compare with the companies that you want to buy. It just helps as a proxy. Yeah, Gokulji, go ahead. Maybe you need to unmute Gokulji.
Sorry, Costco is in a hindsight, it's a great business, right? But 5 or 6 years back, I'm sure everybody was afraid that hey, Amazon will eat their business. Like, how do you overcome those kind of skepticism?
So that's in a very good question, Gokulji. So last time when the previous presentation that we did, right, we said we should calculate the floor value for the business, right? And the way we did was like we calculated the last 5 years of normalized cash flows, and then we did a multiple of it. Let's say it's 10 multiple, right? And let's say Costco is earning $4 billion every year, right? Let's assume, right? Right? Why don't we do it right now, right? And right. So if you see, right, last 5 years, right, Costco has earned at least $7 billion, right? Do we agree, Gokulji?
Yeah.
Right. So, and we know it's a good business, right? So you can say at least 15 multiples. So that should be, if it comes below that, it's gonna be a wonderful business to buy because it's growing, right? We know it's a growing business, right? I'll talk about your thing of like Amazon coming to the equation and the market giving us that opportunity. We'll talk about that. Uh, and that's where knowing the business matters. And I'll tell you, I'll explain that part. But does this multiplying by 15 or multiply by 10 gives you the floor value? So let's say you multiply by 10 and it's $7 billion, so the overall price of the Costco is $70 billion, and $7 billion, right? Fair enough. So if Costco drops below $70 million, right, you have a big enough margin of safety, right? So you can buy it, right?
I mean, at that time, probably true, right? So, but like what you're saying is objectively correct, but it's very difficult to like fend off that thought. Like, I'm just giving Costco as an example, but I face this with multiple other companies where there is always some narrative that yeah, they have been doing so well for this time.
Exactly. So same thing happened with Meta. Same thing happened with, I guess, CBRE. Same thing happened with AMT. I don't know, a lot of other stocks, right? But the key thing that you have to see, Gokulji, is like So all these are if. Do you agree with Gokulji? No one knows the future. Is that fair?
Yeah.
So
Yeah.
the key thing is the last quarter when Costco released its quarter report. Did you see the business grow? And did you see that trend line of growing? If you see that, then you should have the confidence because as a customer you love Costco, right? Right, Gokulji? At least I love
Yes.
it, right?
Yes.
I spend all my time. So
Yes.
the only thing matters to any business is customers. And if customers are voting with their dollars, the stock market will vote the next day sometime.
Got it.
Right. So that's why understanding the business is, right now we're just looking at financial numbers. It won't
Right.
help.
Yeah. That okay. Yeah. That is why I was trying to ask that question. Like, your finance numbers make sense, but then you always have some narrative, right? For example, if you go to Visa, they will say, "Oh, this Bitcoin is coming, or this thing is coming, or that thing is coming." Like, how do you keep your composure against such narratives, and how do you make that judgment
So
of buying such?
three things that have helped me, right? One, I want to see it's a growing business. So Costco's quarterly position will show us that. Is that fair to say?
Yes, yes, definitely.
Does that business have a 10-year historical record?
Yeah, good point.
Third, has it done good in recessions?
Okay,
So those three will give you a little bit of confidence.
got it.
To read the 10 case analysis. And this is where I wrote a tip like 3 days back, right? Everyone can do financial numbers, but what you need to be is business analyst. Because at the end of the day, if you're not a business analyst, you cannot have the confidence.
Correct. Yeah.
So these are some of the things I would say do it, right? The key question that I've learned is like, has the business done in bad times? And do customers love the product still?
Got it. Plus, you're having a margin of safety by saying even if the multiples compress or something
okay,
happens. Yeah. Okay. Got it.
And we also looked at the quarterly, like last 4 months of quarterly and the calls that we obviously should read. It's saying that the business is growing, right? Like nothing is there as a if their management is telling is growing, right?
Yeah.
Amazon
Agree.
effect will happen everywhere. Doesn't matter what happens.
Right.
Right? Actually, that was a wonderful time to buy, by the way. But that time I didn't had this understanding. Okay.
Are you saying that if the business is solid, right, year over year for the last 10 years, then any opportunity is a good opportunity to buy?
Yes, it's a good opportunity as long as you have the confidence. You need to understand how that business unit economics works, how the business makes money, and you need to know. You need to have faith that the business will come back. Like I don't know. Sometime back, Apple was selling at 12 to 15 times earnings. No one wanted to buy it because everyone thought Apple has just one trick pony, which is iPhone. That's it, right? So for 5 years, Apple's stock was like 12 to 15 times earnings. And hats off to Warren Buffett, right? He bought $7 billion of stock. And by the way, buying $100 of stock, buying $10,000 stock, buying $1 million is okay. But buying $7 billion stock in the market for the next 1 year, it's very hard. And having that conviction, that's why he's a goat, right? And today's $150. But what essentially Warren Buffett did was he had that sense. He went to a shop, he saw his nephews loving Costco, loving Apple phone, and them playing games on it, right? So he knows the next generation is already hooked onto it. So those are some of the insights. That's why I don't know if you know about Phil Fisher, right? He talks in his books Uncommon Profits or right. All this like understand the customer sentiment about the company. It's very important. I don't know if you know about Nick Slips, but he talks about the shared philosophy. Basically, in the shared philosophy is where everyone in the ecosystem is growing. I sometimes I don't like Amazon because Amazon, the sellers business, like the seller side of the model, they suffer because Amazon takes their profits, right? They have a lot margin. But I think maybe in Costco's case, everyone's winning. They help they help the whole ecosystem. So if you find a company that's helping the whole ecosystem, I think it's a very good buy for the long term. It's called Shared Economics Model. It's a wonderful read. I can share the literature later. Okay. Are we good? Let's do Amazon. Yeah.
Chandraji, I have a question while we are discussing.
Mhm.
I just pasted the question in the chat.
Pranajji, go ahead. Say it.
Okay, so the question is with the present value of Costco, which seemingly is on the higher side, how do I nail or understand or get the floor value of Costco?
Yeah. So I think the key thing there is to figure out how much normalized earnings for Costco is for the last X years, right? And if you feel it's growing, then you can take the last 2 years. It depends on all your calculations, and then you multiply by a reasonable number. So if you look at the index right now is going at 21 times earnings. So if you feel Costco is better than the market, right, which it is, then you should give it a higher multiple, right? Make sense? So that should be a floor price.
Okay.
Right, so 20 times 8 billion will be 160 billion, and that should be a floor price. So Costco was close to 160 billion that time, right? So it's better than market anyways. So it commands a premium, right? Again, we should not buy it. I'm not saying that we need to buy Costco. I'm just trying to say how good business look like. We are trying to see how good business look like, and the idea is if you find tomorrow another business. So another thing that I want to give a tip, right? I was looking at Warren Buffett's investments, and I think A, he looks for this cheapness, and B, he looks for franchises. Where there's a franchise model, can it grow a lot? Right? Is the future growth, right? And we'll probably talk about some more examples later, right? Let's look at Amazon, right? Right? So again, Amazon is still fairly valued, right? So still a point to, to buy, okay? Again, go to KPIs, right? And you'll see how the business is doing, right? If you look at AWS, right? Sales, do you see the sales? In 2 years, it has doubled, right? International, right? It's going at a healthy clip, not great, right? North America growing beautifully, right? Right. Again, you can see the operating income, right? So if you see, right, Amazon, it shows negative operating incomes, right? Do you see that? Everyone sees that, right? And these are again breakdown by various business. So this is where you need to understand the business more, right? So if someone says tomorrow, and this happened in reality, okay? I'm gonna share an example. Like 2 or 3 years back, Amazon dropped 10% in because UK had a problem. But if you look at UK sales are just less than, like, how much, like 5 is 25, right? 5%, less than like 5%, right? Is that correct? Of Amazon, right? So that was an overreaction from the market, right? So it's a good time to buy. So if you look at all these details, you'll have that confidence. Does that make sense? What I was trying to call out, right? By looking at this details, right? Again, you can see where Amazon is investing a lot of money, right? AWS, how much is investing, all those things, right? So okay, coming back to what Ashish was telling, what profit numbers to look, right?
What's the negative operating cost interpretation there?
Where is it? Sorry, this one.
Yeah, the
Yeah.
operating.
I'm going to explain that. Yeah, give me a second. I want to show you this. And going back to Ashish ji, right? Ashish ji's point, right? There's so many kinds of profits. Which profit should I look at, right? So Ashish ji, do you see net income is minus 272 for Amazon 2022? Right? We all will get scared, right? The business is losing money, right? Do you see that? Right?
Yeah.
And it's volatile, right? It's like sometimes go 33, like it's so, right?
Yeah.
But here's a surprise, and I hope this comes out clean. Do you see the operating cash flow?
Uh-huh.
Do you see that? How it's growing? Right now, it's $75 billion, by the way.
So this is the cash flow that's
One of
coming
the best
through revenue, right?
It's one of-
And they're basically operating the organization based on that.
Yeah. It took me 2 years to understand why cash flow operating is more important. I'm giving that advice right now, but it took me 3 years to figure it out.
So this loss is basically, it could be intentional.
No, so net income can
Reinvesting somewhere.
a lot of things. Net income can, so maybe 1 year back, Amazon had a paper loss on Rivian because it had invested, right? So they will show losses. So they had to show those losses. So it gets added up. Net income is like everything, right? It could be you sold your building, it could be sold your machinery and whatnot, right? It doesn't matter, right? But operating is, so there's something called operating income also. Does that answer your question, Pranabji?
Yeah.
So operating income and cash operating are the two things you should look at. Okay. Berkshire is another example. We'll see negative profits, but if you look at cash flow, it will be wonderful. And you'll see how Amazon is investing in capex. Do you see that? But look at the depreciation. So it's like 22 billion addition is going in capex. Do you see that? So it's clearly investing for growth. Again, return on capital numbers, amazing, right? Such a growing business and still returns are so amazing, right? So Amazon is one of the companies where it's reinvesting and also producing at the same rate. It's very hard to do. That's why it's such a wonderful compounder, right? Going back to the compare report, which I was talking. Okay, there you go. And that's why I'm telling why Amazon is cheap, right? So if you look at Amazon's revenue, it has grown at 24%, right? Makes sense? Visa has just gone 10% rate, right? Market is just 8%, right? But the market has given stock market's growth of only 17% for the last 9 years. If you look at the fundamentals, they have grown at 36% rate. So that's why it's cheaper. Does it make sense? Because it's not been in line with what markets should value this company at.
Chandraji, do you think Amazon is cheap right now or over expensive?
I think it's fairly valued, but but it has such a long runway. It's called the Amazon effect. It's a good business to buy slowly. Again, we'll talk about how much. Again, portfolio allocation would be a different topic. We'll probably cover later how much to do and what not to do. Uh, but this is my process. So I break down my process into 5 steps. First, is business good? I don't even look at the price. First, is business good? Are the returns, are the margins good? Does the business have an operating leverage? Remember the operating leverage I talked about, right? The revenue is growing, but the profits are growing at a faster rate. Make sense? Right? Are the return on capital is really good, right? Again, going back to our first two presentation, right? Then if that is good, right? Then I want to see if the stock cheap, right? Am I getting better than bank, right? If bank is giving me 3% yield, am I getting more yield with Amazon or with that stock, right? Right. If you look at the cash flow operating yield, Amazon is getting 5% return. Wonderful. I would love to take it. Again, it's a growing yield, right? I will take it, right? Versus the banks, right? Then this is reverse DCF. This is a very wonderful tool. Basically, it tells given again the calculation infinity because Amazon has a free cash flow of negative $16 billion. But if we make it $45 billion, we're gonna talk about what it would be, right? So let me just do that for you quickly. So if you go to reverse DCF, so let's say Amazon is like right now $150 trillion. So I'm putting 1,500 there, and cash flow is right now $80 billion, right? Right. So if you assume like number of 10 years you want to hold, right? If you calculate, right, at 25 PE, right? Market is expecting only 6% growth in the next 10 years for Amazon, right? Such a wonderful buy. Again, I'm gonna pause here. Any questions?
Yeah, so some of this is new concepts like DCF and all. Do you recommend any resource to learn about this, or like how do you get to know?
Yeah. So there.
I cannot do this analysis myself. Like
Yeah. So again, use the website and put the numbers there. Put the market price and the cash flow, and you'll get the values calculated for you. But again, there are this investing learning resources
okay.
where I have some books I recommend. I read these 2 books recently. Gokulji, you should read this. Where the this book by Darwin forgot the name of the person, but such a wonderful book. You should read this. This will talk about that thing I was talking about, right? The customer thing and the value to look at. Again, where
Yeah. Got it. Thank you.
and this is some of the videos, podcasts, articles. So they'll help you again. Slowly and steadily, you'll compound that knowledge, I would say. There are some of the investing legends you can follow, and again look at what they buy and why they buy it. So what I do is every quarter they share what they buy. So I look at why they bought it. I want to understand why they bought it. That's my first thing, and then I want to backtrack from it. Okay, let's take one example from anyone. But any questions before that? We are 12 minutes left. Okay. Does anyone wants to take an example? We can take Uber, PayPal. There were 3 examples that we came to: Uber, PayPal, and Beyond Meat. Anyone has any examples to add? I'm going to take Uber, if no one minds. Is it good? Yeah, let's do Uber. Again, we are doing because we all know Uber, right? I would recommend before buying a stock, please understand what the business does, what are the unit economics. So you know when you book a Uber cab, Uber gets some Uber charges you money, and basically what it does, it takes a 30% cut from the driver. So it's a scale business. If you can multiply that 30% number with the number of trips, you got your profit margins. Is that good? Minus the cost which Uber is doing. Is that good? So if you understand that, right, and that will help you evaluate Uber better, I would say. Okay. So again, we're gonna look quickly at what Uber does, right? Right. Again, for me, Uber doesn't have a 10-year history, so I would just be a pass for me. I mean, I need to do more research for me, okay, to get my confidence. But I know Uber has 10 years of history. It's just like the financial history is not there. Quickly, right? Let's look at revenues. They're growing, right? So again, thumbs up, right? Right. But if you look at, does anyone see this wonderful thing? I don't know if anyone sees it.
Yeah, it went from super negative to positive.
This comes with scale. And I have a tool which I'll probably share with you later. But and so it seems it's becoming good business. It's able to generate profits. And again, I want positive profits, right? So clearly it's able to generate positive profits. But the only biggest challenge with all the tech companies for me, and I'll tell you, and this is something I should have told with Amazon, right? The SBC, the stock-based compensation. As a business, you own the business, and if let's say 100 people are owning, and each of you own one share, right? Each own 1% of the company. But if again 100 people get added, right? Now your shares is dropped to is down to 0.5%, which is not good as an investor. So that's what I hate, and that's why I don't buy these companies.
But then all the tech companies do that, right? So
Yes. So there's a catch. There's a catch, and there are a lot of caveats. I'm gonna give some example, right? So even Amazon does SBC, right? Right. Amazon. Let's open Amazon quickly, right? So Amazon also has a lot of SBC, by the way. Okay.
Mhm.
Right. You see 90 million, right? You see that? But the beauty of Amazon, and because we are insiders, like a lot of us are insiders of Amazon, right? If you look at the share count growth, right? Again, this is like multiplied by 20, right? By the way, right? I mean, because Amazon had a number of shares have exploded by 20, right? So if you look at the last 10 years, you will see the Amazon number of shares has just increased by 1% CAGR. So even though they give SBC, but they have not diluted the shareholders. So you need to look at the real share growth of the company. So some companies can give a lot of stock-based compensation, but at the end of the day, you need to look in the last 5 years how much dilution has happened in reality.
but then they buy back as well, right? So they would
Amazon just started buying back last. It did one exception, but Amazon is really good at because in Amazon first 2 years you don't get any shares.
yeah.
They paid a good amount. A lot of employees leave after first 2 years. So again, you have to know the insides of the company. I'm just giving an example. For us as an investor, our goal should be less dilution. So SBC is a proxy, but SBC in relation to stock number of shares is a good proxy. Does that answer your question, Ashish ji? Or Nitin ji, sorry, who also asked like.
Yeah. No, this is good.
And the third thing which I learned like 3 months back, this is the killer, okay? So let's say a company has a lot of options, okay? Doesn't matter. So there's a company called as Trade Desk. Everyone knows about Trade Desk? It's a video advertising company. So their CEO got like a $700 million of compensation 2 years back. So I wanted to buy the company, but when I saw that, I said I'm not gonna buy it. But what happens is like the share price dropped. So the option price that he's getting at, like the mark price he's getting at like let's say $100. But right now, if the price is like $50, then all his options are in water, right? Do you agree? So if most of the options are in water, then it's a good time to buy that company, I would say. Does that make sense?
How do you know this information? Like,
It's in the 10K. So you have to read it.
yeah, okay.
So even in that case, it's a high SBC, but only way those options will convert into shares is when the price reaches that price. So then it's like a special trade that you have to keep an eye on. Because there's an incentive for management to do better, right?
Right. In that case, that guy didn't own the stocks. He's just betting on it.
No, he owns, right? He is the CEO of the company. He's going to get $7 million of stock if the price reaches that value, right?
That's
But-
what I'm saying. So it's a conditional option, right? So
No, but like you, at the end of the day, it's fair point, Ashishji. But like
he will strive to hit that mark.
probably
If he
you
owns
missed,
the options.
probably
Yeah.
you missed our first meeting, and probably the key thing, the biggest thing we buy a stock is we want the owners to have skin in the game. If owners don't have skin in the game, we don't even buy the stock,
Right.
right? So in this case, he has ownership. He's gonna get another $700 million of stock, but that stock is gonna come at a cutoff price, and that cutoff price not even reach. So he has incentive to grow it more,
Got it.
and so it is gonna help you in that case when the prices drop a lot. Make sense?
Mhm.
Does that make sense? See, net income is showing as negative, Pranavji. To answer your question, right? Make sense?
Yep.
And it shows positive also, right? So you have to be careful.
So,
Again-
but Chandanji, one more thing. So right now you're all looking at historical, right? how do you look at the future earnings? So what they are predicting, right? So everybody forecasts, right? So how do you take that into consideration?
So again, very good question, Nitinji. Future is uncertain, so there are a lot of forecasts, and right now this company is saying a lot of recommendation. Analysts are saying is gonna grow this, right? The forecast is a range, right? Do you see that, right?
Yeah.
And so yes, and it's a lot of ifs, right? For me, I just want to see, and I would say the short answer, it depends, Nitinji. It's very hard, but you need to have confidence on the business at the end of the day. I feel Uber has the good thing about Uber. In, let's take Uber as an example, it has mended off its competition. Lyft is not working. Lyft is not doing good, so it's actually it's going to be a monopoly soon.
Yeah.
In its
So my
segment.
question is, every company in their earnings, they would tell you that this is how much we're going to earn next year, right?
Yeah.
They say that, right? So let's say Uber says that next year we are going to have positive profit, and then our earnings, so profit is going to grow, let's say 50%. So they are forecasting that, and then every 3 months they're going to further solidify whether this is like on track or not, whatever they forecasted, whether it's on track or not, right? So how do we keep that into consideration?
So one way to look at it, Nitinji, is, as I said, like the forecasting is hard, right? Even management knows that it can change. You should look the ways, because we have data in terms of management. They have done forecast every year, right? Every quarter, right? Makes sense. So if you
Yeah,
look
they would tell you
at
next.
history, and every time if their forecast has come out true, that means they are basically under promising and over delivering. Makes sense? Like we
Yeah.
do. So if that is the scenario, then it's actually a good management.
Yeah.
Then you can trust the numbers. But if there's a management like GE did, I don't know if you know the GE story. They used to match the earnings call every time, so they used to make up the numbers, and they got caught after 15 years, whatever the number of years, right? And the stock dropped like hell. So that's why you need to buy. Remember our first time we said we want to buy with management who has skinned the game and whom we can trust. Otherwise, we don't want to go there. Fair enough.
Mm.
So
Yeah.
that is a quality factor that you will get only when you read the proxy report, right? We talked about the proxy report, remember, Nitinji?
Mhm.
Last time?
Yeah,
Does that answer your question, Nitinji?
it does. I also, always the companies I invest in, I always look at their, attend their earnings call, and look at like what they're forecasting, and it gives me like a lot of insights into the company as well, the business as
The
well.
only thing I'll recommend there is like check what analysts are asking and understand what are the unit economics there. That's what I look for. I look for the concerns and the unit economics. I don't care about anything else, because market will always take care of the concerns, because whatever analysts are saying is already taken care of. Like the prices will reflect that. The
Right.
biggest thing is, can the company mitigate those concerns? So one of the concern right now for, I don't know, I'm following Hershey's, Visa, and some more companies right now. One of the concerns for Hershey's is cocoa prices are increasing, so their profit margin is decreasing. So the price is already baked in. Now the
Yeah.
only thing is, tomorrow once cocoa prices drop, Hershey's stocks gonna increase, explode. That's how it's gonna happen.
Right. Right.
You need, if you understand the unit economics of the business, it will help you.
Yeah.
Gokulji had a question about SBC, adding back SBC to cash flow statement. Yes, Gokulji, I do that. I make that calculation. But like my goal is to understand what the business is producing, because tomorrow, after 5-10 years, when the business stops giving SBC, right, which good companies do, right, then all those profits will become cash flow, right, Gokulji? My goal is like, being a complete owner of the business, my goal is, what is that stream they're producing? So I want to know the real earning part of the business.
Right, like most of the tech companies I struggle with, right? Even the ones like historically, if you had invested in them, they probably would have done good. But then they are net income negative, right? In
Yes.
terms of pure accounting. But if you see, they are cash flow positive, like multiple businesses like that. How do you assess them, or do you don't even touch them?
We will talk about that maybe in the next class.
Okay.
For me, short answer is a hard pile, Gokulji. But I give you those examples, right? The stock option, all those examples, right? Skin in the game. Those
Yeah.
will help me. And
Hmm.
there are some examples like Remitly right now, Coupang that I'm looking at right now. They are good companies, right? And you need to look at some patterns there. And there's a wonderful tool I built. Again, it's not in the web UI form. It's called Expectation Investing. There's a wonderful book by Michael Mauboussin, if I'm pronouncing it correctly. He's written a book, Expectation Investing. I would recommend reading it. Right, the link is here. Right, if you want to buy it, right, and his website is there. But this Excel sheet, sorry, I don't buy the tracks. Yes, so we can talk about this tool, but it will help you figure out the real value. Basically, what you can do is you can calculate expected profits in the next 10 years without that, and you can calculate. We can do a demo later of that. But
Nice.
you'll be able to,
Nice.
if you'll access that. So that way you can. So Ashwath Damodaran does that in some way for this futuristic companies. He says with time, if their costs, those marketing profits and those R&D costs that they are incurring right now, if we remove them, what will happen? Like if we make it like as a percentage of what mature companies are spending, right? Make sense?
Yeah. Yeah. Thank you for that perspective.
Where the money is, where the money is, that will answer all your questions, Gokulji, for that. Okay, I'm gonna
Okay.
pause here. Does the SEC website, like things we went through, make sense? So Pranabji, before you have a question, I want to quickly go to the website, right? So again, we provide recommendations. We provide what would happen if you invested in the stock 5 years back. What is the future target that we predicting the stock would go, right? You see that right here. How do we generate, right? We show how did we arrive at the price. It's there, right? Then there are annual reports. Then there are quarterly statements, right? And I talked about skin the game, right? Everyone remember skin the game, right? So if you go here, you can click on the proxy report and you can see it, right? And the key thing, and I've written what you need to look at, what exactly you should look at in the proxy report. So just look out those variables, it should be good, right? Is that good? Okay, one last thing, then we'll answer. One thing, always do never look at the numbers in terms of dollars. Always look at it in terms of per share price. It's very important. And this is where it will help with dilution, Nitinji, right? So if let's say a company has generated $100 in revenue and next year generates $200 of revenue, the first year it had 100 people, so the earnings per share is $1. Do you agree? But next year it has 200 people, so what is the earning? Still $1. So as a owner, you have not got anything. Make sense? But as a revenue, you see a double, right? Make sense? So I created something called as vertical analysis. It's still not in the right shape, but it does a wonderful job, right? So if you go down, right, it's called one vertical analysis. What it does, it divides that by number of shares, so you can see the real growth. Make sense? What are you getting per share? Because that's your ownership, right? Because we are partial owners, right? Is that good? Again, you have graphs which we can follow. You can click on this graphs. You can enable, disable it. You can say, oh, I want to plot how revenues and cash flow are growing, right? Actually, let's take the best example that I feel is waste management, which is my favorite company right now. I just want the price to drop. It doesn't drop. I don't like that, but that's how it is. You see how the revenues are growing? Do you see that? How the revenues are growing, right? Consistently. Look at cash flows. They're also going consistently. You see that? Look at that. Wonderful growing, right? So always look at per share numbers. That's what's my takeaway from here. Okay, we're gonna stop the recording. Yeah, Pranabji, you had a question.
So I was just playing with your website, and I had a question. From where the symbols are picked? Let's say if I add something for an analysis, and what are the conditions wherein I don't get that, or when will it not appear here?
Yeah, so I only have companies that I like, and probably someone recommended me to add it. It's costly to build a solution like that. AWS costs are bubbling up for me. So I do it in a very cost-effective way. So if you think want a stock, I can add it, Pranavji.
No. I just came across, so I thought
We can add it. Don't worry about it. We can add it. It's just like right now it's self-funded, so that's the thing. But if you want the stock, it's not a problem for me to add it. Not a problem. Okay, just share with me later.
no problem.
So again, just to wrap up, again, I hope you learned something today, right? So just a big takeaway, right? When it's green, we learn about our moods, right? When it's red, we learn our moods. Think like a contrarian, right? Understand the business. Look at only business where you think the management has skin in the game. Price is your margin of safety, so make sure you figure out the floor value of that. And if it reaches the floor value, start slowly dabbling in. Always buy one stock, that we can keep track of it. That's my advice to you, right? And if you feel this presentation today has helped you a little bit, I would love to. I'll encourage everyone to share some of the creative things or some of the things that they have learned with your fellow friends, members, and please pass on the word, right? I hope this was helpful. And if it has helped you, do share it, okay? Do share whatever you feel has been a game changer for you from an investing perspective. And going back to Gokulji, right? I hope I've convinced you why wonderful investing can beat index with that compare graph that I just showed you.
I mean, if I had the stomach to do it, I would have done it. Because I don't have the stomach like you.
Okay. Let's. Any more questions? Cool. We're gonna.
Thank you so much, Chandanji. Really
Thank
appreciate
you so much
your
once again,
time.
Chandanji. Big hug
Super.
to you.
I hope this is learning for everyone.
Yeah.
Super learning, sir. Super learning.
Thanks, Chandan. Thank you.
Okay, thanks, Shannon. Talk to you later.
Bye-bye.
Welcome, Shirji. Yeah.
Thank you.
Bye bye.